Good morning, good morning, good morning. It's Randy Byrd, and I am here for your monthly market update. It is August 2021, and I'm going to be bringing these to you every single month so you can really stay abreast of what's going on in the real estate space. As you know, I've been a real estate broker for 18 years now. I've been a coach professionally for the last 7 years, and I have a unique glimpse at the market because I coach in 12 different markets from Florida, Utah, San Diego, Canada, North Carolina, South Carolina, Oregon, Idaho. I have clients in all those spaces. So I get a good feel for what's going on in the market globally, if you will. And what we're seeing is about 4 weeks now, 5 weeks ago, we saw an immediate change. At first, I had one coaching client say that the market softened. All of a sudden, something changed. And I just thought it was an anomaly. And then next week, I had 7 coaching clients say the same thing. And within 3 weeks, every coaching client was feeling the difference of the market. It could be a summer thing. There is an inverted market going on because of COVID, because of all these timeframes. But I want to give you some statistics that I think are valuable for you. And this is going to be a short monthly update of just kind of bullet points of what's going on in the market and what we're seeing so you can stay abreast of what's going on. I definitely see a shift or a turn coming in the future. Nobody has that crystal ball, but we all been waiting for that little bit of softening, a little bit of, things kind of slowing down. It's still, by any comparison, the craziest market we've ever seen in our career, in our lifetimes. But that at some point has to shift and has to move, right? What goes up must come down, as they say. This could be the start of it, but my job is just to give you factual data points to follow. So number one, national house prices across the whole nation were up 15% higher this year than previous year. So 15% increase in housing prices across all markets. We saw some that were up 23%, some as low as 13%, but 15% average across the market year over year. Housing demand is very high as a result of historically low mortgage rates and coronavirus inspired flight from heavily populated urban areas. We're going to talk about that. Some of the biggest losers, no pun intended, were New York, where they lost 110,978. So 110,978 people flew away from New York into other markets. That's a massive amount. San Francisco, minus 27,187. That's a very significant, when you look at those major metropolitan areas, losing that kind of population. Chicago, minus 31,347 people leaving the big cities, especially during the coronavirus, over the last 18 months or so. Some of the biggest gains, with really no surprise, Texas. Texas topped 6 out of the 7 top areas of movement in the whole country. Number one being Katy, Texas, if I'm pronouncing that right, Katy. Katy, Texas, number one, gaining 4,414 people. And then, like I said, Texas rounded out 6 of the top 7. Meridian, Idaho, 2,088 people. So a lot of people moving to Idaho, to Texas is number one in the country. Idaho, I think, is the number 2. Florida started seeing some movement. A lot of New York traffic moved down through Florida and Virginia and those areas. Nationally, again, 15%. What was interesting is the mountain region, 21% of appreciation through the whole areas. That was the number one in the nation, being the mountain region, 21%. So the Colorados and, that area. Inventory fell 26% year over year from January to January, 26%. And we have a lot of things contributing to that. We have, mortgage rates are historically low, decreasing both the financial incentive of buyer and consumer demand. Inventory is expected to rise because we're seeing allowing supply to come closer to demand. We've seen a big challenge with the construction industry. OSB went from $9 to $58 a sheet. 2x4s went from $3 and $4 to $10, $12, $11, $12. Being a general contractor for 25 years, 28 years now, we've never seen that's totally unprecedented. Lumber prices are starting to come down now. I think it was a significant amount of gouging going on. There was not a massive lumber shortage. It was just a supply and demand deal. And that's pretty common. The direction of the monthly housing data results appear to be towards normal now, although demand and supply are likely to be adversely impacted by the end of the federal aid programs and all these things. We've got moratoriums for landlords and tenants. All this stuff is disrupting. Lumber and other material prices are continuing to rise in the background and increasing inflation, but we're seeing some of that softening now. New home starts significantly delayed. I've had custom garage doors that I'm super excited about. I ordered in January. They're still not here. My garage door guy, if you're watching, I'm watching you. I want my garage doors. But 8 months is standard for anything like that. And you can't run a new construction business like that. Trusses were 2, 3, 4, 5 months delayed. Normal 8 weeks to get trusses. Now they're 6 months. That screws up housing all the way around. So in my opinion, we're going to see some of this continued softening as buyer, basically what I believe as a real estate broker and coach, the buyers have had enough. The buyers are to a point where like, okay, I'm going to wait. This is crazy. And there's an opportunity amongst them in the future. Sellers are still a little bit in la la land. They've run the gamut for a year and a half, or maybe even 5 years now. It's been a seller's market. Really since 2011, if you look at it, we've been in a steady seller's market for a decade. But in the last 24 months, it's really ramped up. So what we've seen is buyers just being silly, 100, 150,000 over asking price, 200,000 over asking price in a Santa Rosa market. So we're talking about a $600,000 price point offering 200,000 over because of inventory and just lack of demand. That is changing. We're not seeing those kind of numbers anymore. We're still seeing multiple offers, but not 25 and none 10, 100,000 over asking price. We're starting to see, again, still white hot, but in comparison to 6 months ago, completely different market. A lot of resistance and pushback on the buyer side. We're still seeing a lot of, if you're in contractual negotiations, listen to your agent. I'm just providing some national data of what's going on, but we're still seeing a lot of, 6 months staying in the house for free, opportunities for sellers. We're still seeing a lot of, no inspections and waiving everything, waiving appraisal gap contingencies, still a very heavy white hot seller's market. But got to get off your high horse if you're a seller, and you've got to look at opportunities now and treat them as they may be going away. So as we see that, the buyers will start to identify a lot more inventory coming on the market because things are going to expand on the market longer time frame. We're going to see decompression in terms of how many offers they're getting and the amount of offers the sellers were expecting. Literally, I had a couple of sellers go, we're going to list it for this, which was the top of the market, but we're expecting 100,000 over asking price. That is coming to an end. So nobody has a crystal ball, but this is what the data and the data points are pointing towards. So the flipping industry has been really a challenge for the last 1 or 2 years. I went to a hold pattern with my investments and flips because it just got to be too crazy, that the margins are too tight to take that amount of risk on. Over the last couple of years, we've been able to mitigate those risks just because it's so crazy. And I think that time's coming again for opportunities in the flipping and investment markets. I'll leave you with this. The commercial market, I think, is going to be bloodied. Again, I'm making a bold statement, but that's what this is all about, to give you an insight in my head of what I think the future holds. I think we're going to see commercial short sales, commercial being, commercial buildings and multi-units, 12 units and more and so on, even though commercial is classified as 5 units or more in lending. Residential 4 units or less, or residential loans, commercial loans are 5 or more. But I'm talking about the commercial strip centers. I'm talking about the multi-use. I'm talking about the commercial industry, restaurants and bars and shopping malls. All those things are going to be heavily impacted by COVID and by the implications of what COVID's done. So what we're going to see is short sales in commercial, which we've never seen, because you got to enter in the commercial market with a 25 or 30% down. Well, they're going to lose those values. They're going to lose the tenant opportunities. They're going to sit vacant. And with the moratoriums, with even the smallest investor having 1 or 2 or 3 properties and the tenants not paying rent on those, have an impact. So I think the commercial space is going to be really an opportunity investment wise in the future. And so as we move through that, time will tell this, but watch as we progress. I think we're going to see a continuation of inventory rising because it's going to take a little time for the sellers to get real with what's going on in the market, and the agents to understand. The top quality agents are really understanding they've got to get in front of that market, not chase it, especially chasing it down. I remember doing that in 05, 6, 7 when the market started shifting. A lot of agents were chasing the market down, and they chased it to 7 and 8 and 9. And then sellers were stuck sometimes with 2, 3, 5 years of a hold because of that time frame. So that's my somewhat short market update for August 2021. I'm looking forward to bringing those to you. If you're getting these, opt into my newsletter. Let us know. We're going to send these out monthly to give you some ideas of what's going on in the market and what we can do to help you stay abreast. This is Randy Byrd, eXp Realty. I appreciate you. Thank you for being here, and looking forward to doing business again in the future. Remember, as a shameless plug, we're open for referrals in over 20 states now. I have an operational organization of 600 agents now. We're in 20 states. We're in Puerto Rico. We're in Canada. We're in India, Italy, Mexico. Just opened in Hong Kong. If you have any referrals for the real estate business, reach out to me first. I'll connect you with one of my teammates, personally oversee it. If we can help you, I'm here to do that. Have a great day. I appreciate for now. Randy Byrd saying goodbye, and I will talk to you soon. Bye for now. Bye.